Hello, you're watching Sydney Direct. I'm Natalie MacDonald. As the Aussie dollar continues to feel the pinch, I'm here in Melbourne today to catch up with IG Markets and see what they see as being the key drivers for the domestic currency and also find out their forecast for 2015. Stan, thank you so much for taking the opportunity to chat with us today.
No problem at all.
Okay, so Aussie dollar, we know it's heading down. It's been heading downwards for some time now. But what do you see as being some of the key price levels then through 2015?
Yeah, I think the RBA really surprised everyone completely by coming out and cutting rates straight off the bat. And of course, this was in response to a number of policy measures being taken by other central banks globally. Additionally, the local and domestic forces have really been pointing lower. We've had unemployment starting to rise. We've got consumer confidence struggling. We've got house prices not quite rising by as much as they used to. And eventually all this led to the RBA needing to cut rates to keep stimulating or to keep growing the economy. And of course, preventing itself from being caught behind the curve by other central banks globally. Now, with that in mind, the Aussie dollar has certainly taken a leg lower, and it does seem like it's really accelerating much faster than everyone expected. We've already seen it drop quite significantly this year. It's now trading at about 77 cents against the greenback. It does look like there's room for more losses, particularly after we got some very disappointing unemployment numbers today, which showed that unemployment's actually ballooned out to a 12-year high. So it does seem like they will need to cut again soon. We have seen the chances of a further rate cut in March sort of blow out from about 39% to about 65% just in one day. So it does look like there's room for further losses there.
You've touched on the RBA, and naturally that's a key driver, as is markets going to be pricing in that further rate cut in March. But what other drivers are we seeing? There's been a lot of discussion, for example, about how the Aussie dollar story is almost really the US dollar story.
Yeah, absolutely. The other side of the equation's been playing a very big role. We've got Fed expectations for rates lift-off coming back to about June at the moment, and I think the more pessimistic ones are looking at September. So it certainly does look like the Fed is on track. But as well, you look at other regional forces. You look at China. It's really had a big toll on Australia. They have been happier with slower growth. That's not good for Australia. We've seen iron ore prices drop to about $60 at the moment. It does look like there's room for further weakness in the short term. That's not good for our terms of trade as well. So all up, it does look like all forces are pointing towards a lower Aussie dollar versus the US dollar.
That's sort of the US dollar cross taken care of. Is there any opportunity really for Aussie dollar traders, aside from selling it?
Yeah, absolutely. I think whilst the Aussie on itself is looking very weak, I think you still have to play the policy divergence amongst central banks. And one in particular that's been looking to cut rates even further is the Bank of Canada. Of course, we've seen turmoil in oil prices. That really forced them to cut rates in January. And it does look like they will be looking at further cuts, particularly if oil remains at these levels. It does already look like their GDP will significantly contract due to the weakness we're seeing in oil. We've seen the inflation start to fall off as well. So if you can find opportunities, it might be looking at buying the Aussie versus the Canadian dollar. But in terms of other crosses, I think particularly against the New Zealand dollar, we will see further weakness in the Aussie dollar, and this pair might actually trade as low as parity in the near term.
Stan, thank you so much for your comments today. We look forward to following this story and this comments. Thank you.
No problem. Thanks for coming.
Sadly, that is all we've got time for right now. However, the Aussie dollar story is one I will continue to keep you updated with from the financial community right here in Australia. For now, though, it's goodbye.